this is a precursor to whatever is coming. And I think when you put it in context to gold being reclassified a tier one reserve asset by the Bank of International Settlements, the only other one in the world other than US dollars in 2019, you can just see these pieces being put into place where countries and financial institutions and family offices and sovereign wealth funds are, like most big money throughout all of time, is one or two steps ahead of the crowd.
Commodity trading means you buy and sell commodities rather than finished goods like a house or financial assets like stocks and bonds. A common form of commodity trading is investing in precious metals, namely gold and silver. As an investment asset, gold and silver have very different properties and uses in your portfolio. The most important thing that differentiates investing in precious metals from investing in other commodities is profit. For most other commodities, investors judge value based on consumer supply and demand. Precious metals are different in that they have relatively little commercial utility. Compared to other metals, there are relatively few consumer or industrial uses here for assets like gold and silver. In today's video, we'll share why Andy Schectman believes it's time to heavily invest in gold and silver. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. If the Fed chooses inflation over tough decisions, their currency is destroyed forever. Interest rates will go up. It will be hyperinflation. If they make difficult decisions, it will be a depression. So either way, whether it's hyperinflation or a Great Depression, massive inflation or incredible deflation, gold is the best place to be. We always talk about its inflationary qualities and deflation or depression. Gold and silver are two of the only assets on the planet that are not simultaneously someone else's responsibility. Therefore, the elimination of any counterparty risk or liability makes gold and silver incredibly valuable in times of depression or deflation. You'll see a lot of money like this come out and gobble up anything remotely available in this industry because there's a lot of money that's been created. In fact, more money in the last 3 years than in the history of the country that precedes it. And all of that money has been invested in assets that have skyrocketed, and the smart ones are already sitting in the sidelines, and they're teeming with cash. If you're indeed looking for precious metals, obtaining physical commodities becomes incredibly difficult. This will define the industry, i.e., the inability to easily obtain products, as less than half of 1% of the public owns gold. The Harvard Endowment Fund's average public precious metals allocation to Joe's six-pack is 0.5%. If it becomes 2% or 2.5%, that's a five-fold increase, and we can barely handle the supply issues. It becomes very difficult. You're currently seeing premiums on Silver Eagles around $15 above the price of silver, and now they're going to cap gold in this environment. The market will be defined by the public's inability to obtain products on many levels. If you don't jump in there, you won't get the product. Gold is what is called a counter-cyclical investment. This means that it tends to rise when major assets fall and vice versa. Historically, the worse the stock market gets, the more investors flock to gold. Conversely, when times are good, investors tend to shift their money from gold to assets more tied to the broader economy. As a result, many investors hold gold in their portfolio specifically in case they need cash during a recession. For example, a recession is the worst time to sell stocks, but the best time to buy them. Having a pre-existing investment in gold can give you a valuable asset to sell during a recession, so you can buy other people's undervalued assets without selling your own. In contrast, silver tends to move with the overall economy, at least more than gold. This is largely due to the same trading apps that make silver a more predictable asset. When the economy slows, industries need less money for manufacturing, which drives prices down. Although no major economy uses gold or silver as the basis of its currency, investors still view these two metals as active stores of value. Silver is more volatile, cheaper, and more closely tied to the industrial economy. Gold is more expensive and better for diversifying your overall portfolio. Either or both can have a place in your portfolio.
In either case, whether it's hyperinflation or Great Depression, whether it's massive inflation or incredible deflation, gold is the best place to be. You know, they always talk about its inflationary qualities, and in deflation or depression, gold and silver are two of the only assets on the planet that are not simultaneously someone else's liability. And so the removal of any counterparty risk or liability makes gold and silver incredibly valuable in a depression or deflation.
That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.